Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the low time frame bearish scenario, where previously we were only looking for an ABC to the downside, which is a 3 and then a 5-wave move to the downside for a wave C, where the most common target area for a wave C is between the two 1.618s, sitting between 29.1k and 28.4k, which is in confluence with this support area over here around 29k. But now I also put a potential WXY on my chart, main reason being that we have been ranging here for a while now, and this can still be a 5-wave structure to the downside, but due to the length of the range, it can also be a 3-wave structure here to the downside in a zigzag ABC. For then a WXY being a 3 and then a 3-wave move, where the most common target area for wave Y is between the 1 and the 1.236, taken from the high to the low of W to the high of wave X. The only thing here is actually time, because looking at the length of this W as well as the length of this X and then a very small Y, that doesn't really match. So the fact is Y is so small in time is usually not something you want to see compared to a much larger W and a much larger wave X. So that's something to keep in mind, lowering the probabilities of this being a WXY over here, but we do have to at least consider this scenario, after which we would then expect a move towards the upside. If we go to the more bullish scenario, then we are looking for this to be a wave 1, 2 and continuation in a wave 3. So the corrective structure is already finished in then a WXY, and we are now looking at an impulsive structure towards the upside. This wave 1, however, is not clean at all. It is an expanding diagonal. This wave 4 over here being a potential zigzag, which is what you want to see in diagonals. You want to see wave 2 and wave 4 being zigzag structures. But here in this zigzag ABC, wave C did not take the low of wave A, which isn't really what you want to see as well. So very awkward count here for this to be a wave 1. Then in wave 2 we have a zigzag in an ABC, which can work absolutely. The 1.618 is a rare target for a wave C, taken from the high to the low of A to the high of wave B, and as you can see has been very nicely respected. And also the candles closed just above the 886, and the 886 is a rare target for a wave 2, not a common target. It's more like a common target for a wave B or a wave X, and you can see that the 886 has been tapped, and the fact it has been tapped lowers the probabilities for this to be a wave 1, 2 and continuation to the upside in a wave 3, specifically then lowering the probabilities for an impulse. In a WXY, which I just mentioned in the previous scenario, the 886 is fine. It's a good target, but for a wave 2 in this particular scenario, for then a bigger 3 to the upside, this is not really something you'd like to see. And also, if we are now at the beginning of a bigger wave 3, you really want to see volume pick up and also price moving to the upside, because this is already taking quite a long time. If we go to the micro scenarios and zoom in to the lower structures, then first of all, for the impulsive structure, well, if this is the low of a wave 2 or the low of a wave Y, we want to see a continuation to the upside in impulsive structure. So this can be a diagonal on the lower time frames for then a potential wave 1. And then this wave 2 is either going to be extended very long, or this is the low of wave 2. I prefer time-wise that this is the low over here of a wave 2, and this is potentially then another wave 1. So you then have a wave 1, 2, 1, 2. The only thing I struggle with in this case is that like it can be a diagonal, but you know, it's a bit awkward as well, as this is almost horizontal here, because you then have a wave 1, 2, 3, 4, 5. 4 is extremely shallow. 3 is just above the high of wave 1, but okay, that works, you know. So it works, it can work, but it's not a clean diagonal. It doesn't look good for another wave 1. It looks very much corrective still, and this structure to the downside as well. And that's something we have to keep in mind. But we have to consider the scenario of this being a 1, 2 and continuation also because of the bullish CVD divergences that we have between the lows over here, higher low on price, lower low on the CVD, which I will show you in a second. For then potentially a 1, 2 with bullish CVD divergences, another 1, 2 with bullish CVD, and then continuation. So this can definitely be a second wave 1 for then a move towards the upside, but that also means that the next move to the upside we're going to get should be a bigger impulsive structure and then a wave 3, or you get a 1, 2, 1, 2, and then another 1, 2. And the moment, this is important, the moment we hit this resistance area and price is going to range over here and starts to build bullish CVD divergences, expect or probabilities are higher for a move towards the upside, right? So hitting this target area over here, this resistance area, is going to be very important for continuation or downside. And what I would like to see for upside is bullish CVD divergences after hitting this resistance area, building up, and then I can expect a push towards the upside and continuation for then potentially a 1 2 1 2 1 2 and then a bigger 3 to push through the resistance. In the micro bearish scenario, we're still looking for a move towards the downside. And this is also where you can see that this range over here is starting to get quite long compared to wave 2. Because here we're looking for a 5-wave move down and then a 1, 2. Then we have wave 3, wave 4, and eventually wave 5. Currently, wave 4 is already more than 3 times longer, 3 times the length of wave 2, which is very, very long. Usually, my cutoff for a wave 4 is around the 3-fib time, meaning it's already past my cutoff, usually like 3 to 4. Let's extend it for a little bit in this scenario, but it is starting to be a very, very long wave 4. If we then look at the target for a wave 5, it is between the 1.236 and the 1.618 most commonly, taken from the low of 3 to the high of 4, which is between 29.8k and 29.5k. But then you also notice that it is not close to the lower target box that we have over here for wave C. And that is the big reason why I also put a WXY on my chart on the low time frame bearish scenario over here, where this could then be the end of a Y, and we're going to be looking for a move to the upside, especially with the bullish CVD divergences building up as well. So everything is like playing together. So the bearish scenario was looking very good, but time is ticking for price to move towards the downside in then a wave 5, or, and this is also another scenario on the chart, a potential WXY to the downside. So we have a 3-wave structure and then a wave W, followed by a 3-wave structure in a wave X, and then we get a bigger 3-wave structure to the downside in a wave Y, where the most common target for Y is between the 1 and the 1.236, taken from the high to the low of W to the high of X, sitting between 28.6k and 28.1k, which is of course very interesting because it has confluence with this support area here between 27.8 and 28.2k. The main thing is that for this to be a WXY, doesn't really fit the higher time frame scenario, because the target area for Y is over here, but in a bearish scenario, this is the target area for Y in then a 3-wave structure where the rare target is the 1.618, but that rare target is still over here, far above the lower time frame yellow wave Y, as you can see. So that doesn't really match. It is in confluence with a wave C over here, the wave C target area, but this is not a wave C anymore if this is not an impulse but a 3-wave structure. So we have to keep our options open for on the higher time frame, and now this might be a bit messy, for this impulsive structure to be a wave 1, 2, 3, 4, and then the final push 5. It's not nice at all, but if we're going to continue to the downside towards these prices, this might be the high of a 5, and we're looking for a 3-wave structure to the downside like that. But that is very hypothetical at the moment, something I'm definitely not thinking about, because this range is gigantic for a wave 4, and this being a wave 5, it doesn't look nice at all. But at least planting the seed in our heads, because we are just thinking about it. At least we keep things in mind as Elliott Wave counters. Now, bullish CVD divergences, as mentioned. Now we had bullish ones over here. These played out with the push. We have a new bullish CVD divergences, and also more locally here, they were building up. We still have bearish CVD divergences with this little order block, but I would still like to see a move towards the upside to hit this resistance area. On the 50-minute AGGR chart, it looks like this: higher lows on price, blue, lower low on the CVD chart. So that is actually quite nice. On yellow, we don't have bullish CVD divergences. Interestingly, we had a bit of bearish CVD divergences here at the highs, lower high on price, higher high CVD, but these already played out. More locally though, here you can see the bullish CVD divergences on yellow. So higher low on price, lower low on the CVD, very important for then a push towards the upside. And that is also where we stand at the moment. So if we then go to the probabilities, and I zoom out a little bit, then regarding the micro scenario, what I like to see is a push towards the upside to reach the white target box, right? I want to see price hitting this target box. That would be preferred. And then over here, I am neutral. I want to wait and see what price is going to do and how is this going to form the moment it is going to hit this target area for a preferred scenario, probabilities to the upside or to the downside. I mentioned I want to keep an eye on the CVD divergences here as well. And based on that, I can then get probabilities for either the up or the downside. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.